Hello students, in this video you are required to open the necessary ledger accounts to record the following transactions. Here some transactions are given like started business with cash, then there are some cash transactions, credit transactions, expenses of the business. So we are going to give the effect of the transactions in ledger accounts. Now, as we already discussed what is double entry system, various rules of debiting and crediting for personal account, real account and nominal account. So now in this video we will learn directly how to prepare ledger account and posting information to ledger account. Again, now if you want to revise what are the rules for debiting and crediting, also what is personal account, real account and nominal account, you can check video link given in description for revision purpose. Now for better understanding, I will also again here discuss for each transaction which account to be debited, which account to be credited. So it will be more easy for you for posting transactions in the ledger account. Let's first see each transaction one by one and discuss which account to be debited and credited. See the first one, Juma commenced business with capital in cash 50,000 on 1st January 2010. So here, when business started with capital in cash, two accounts which are affected are cash and capital. Cash and capital. Now which account to be debited and which account to be credited? So cash account, as you know, it is a real account. So real account rule says debit what comes in. So as cash is coming in the business, so for the 1st January entry, cash account should be debited. Cash account should be debited. And on which account it is coming? It's coming for the capital. Capital account is a personal account. Instead of proprietor, we write word capital. Personal account rule is debit the receiver, credit the giver. So who is the giver of a cash to the business? Proprietor, Juma. He is giver of the cash to the business, but instead of writing his name, what we write? We write capital. So account to be credited is capital. Students, always remember, capital has always credit balance. Capital account should come always on credit side. So cash account to be debited, capital account to be credited. See students, this we are just discussing which account to be debited, credited first, so it would be easy for you at the time of posting transaction. Second one, on January 2, bought goods for cash. Bought goods for cash. Here, whenever there is a transaction for purchase or sale, first thing you should see that whether it is on cash or credit. So as it is on cash, first account is cash and second is bought, that is purchase. When there is a purchase of goods, we have to use word purchase and not goods. So two accounts affected here are purchases and cash. Purchases and cash. Now purchase account is which account? Purchase account is nominal account. So nominal account rule says debit the expenses. Debit the expenses. So which account will be debited? For the 2nd January transaction, purchases account will be debited, purchases account, and as it is bought goods for cash, so cash is going out of the business, so cash account will be credited. Cash account will be credited. Now next one, sold goods on credit to Macho. So here you can see it is a sale. So first account will be affected is a sales account, and as it is on credit, whenever it is on a credit, we have to give effect to that personal account. So here Macho is a personal account, he is a debtor to the business. So two accounts are affected, sales and Macho. Sales and Macho. Now sales is a nominal account. Nominal account rule says debit the receiver, debit expenses and losses, credit income and gain. So here sales account will be credited, and Macho is a personal account. Personal account rule says debit the receiver, debit the receiver. So Matthew's account will be debited. Fifth transaction, sold goods to Chaka. Again here one account is sales and other account is Chaka. So sales account will be credited. Nominal account, again rule says credit the income. So sales account is credited. And who is receiver? Receiver is Chaka. So Chaka's account is debited. Next one, sold goods for cash. See student, now here it is on 12th January sold goods for cash. So here cash account says real account rule is debit what comes in, debit what comes in. So cash account will be debited and sales account will be credited. So here you can see the difference between 4th, 5th January transaction and 12th January transaction. On 4th and 5th, being it is credit sale, we have to give effect, debit effect to debtor. Okay, who are the customers. And when it is a cash sale, we are not writing the name of the person. Even in the transaction, name is not given. But even if the name is given, don't write the name of the account to the debit side because we are receiving cash. So cash account will be debited. And in the both case, sales account will be credited. Always remember sales account as credit balance. Okay. On 15th January, it is bought goods from Byte. Now it is a purchase. Bought means purchases. Purchases is a nominal account. So debit the expenses. So on 15th January, purchases account will have a debit effect. And who is the giver? Byte is the giver. So Byte's account will have credit effect. Now here you can see transaction on 2nd January also bought goods, but it is on cash, bought goods for cash. So here purchase account is debited and cash account is credited. But when it is bought on credit, you have to debit purchases account and credit Byte's account, that is the creditor's account. Now on 16th, it is paid wages in cash. Now here wages are paid for the business and cash is going out of business. So the two accounts affected here are wages and cash. Now wages being a nominal account, rule of nominal account says debit the expenses and losses. So wages account will be debited and cash is going out of the business. So cash account will be credited. See, for any expenses paid, whether it is wages paid, transport charges paid or salaries paid, you have to debit that particular expenses account and credit if cash is going. So you have to credit cash account. If it is paid by check, you have to credit bank account, but never give never give debit to the personal account. Like suppose here it is given, if it is given that paid wages in cash to Fatima, so don't write Fatima's account to the debit side, being debit the receiver. Okay, you have to give effect for the nominal account, that is to wages here. Next, paid transport charges. So again here two accounts affected. One is nominal account, transport charges. So transport charges will come to debit side and cash come to credit side because debit the expenses. So transport charges will come debit side, cash is going outside, so cash account credit side. Now paid rent, again same, it is expenses, so rent account will come on debit side and cash account will come on credit side. Now it will be more easy to post entries to the ledger account. Now which accounts are affected here? Cash account, capital account, purchases account, cash is already there, then Matthew's account, sales account, Cheka's account, bites account, wages account, transport charges account and rent account. So 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10 account. So now you have to draw various ledger account. You already know the format of ledger account. See again, like we are here, cash account, date, particulars, folio amount, date, particulars, folio amount on both side, date, particulars, folio amount. On the top we will write debit and credit, and don't forget to write debit and credit above. So cash account, date, particulars, folio amount, date, particulars, folio amount. If any specific currency is given in the question, you have to write down here in the bracket, like dollar, rupees or Tanzanian shilling, anything. Now which accounts are affected? We are preparing all the ledger accounts: purchases account, sales account, matches account, bites account, wages account, transport charges account, rent account, capital account. So in this way, preparing all ledger account. Now just we will post all the entries one by one to all ledger accounts. First, in the date column we are writing year. In the question it is given 1st January 2010. So in the date column, writing both side 2010. In all ledger account you will write down the year. And now in the chronological order, date wise, we will go one by one with all entries. Commence business with capital in cash. A very simple rule to remember: in the cash account, whenever cash is coming in the business, you will write on the debit side. When cash is going out of the business, you will write down credit side. We also discuss about account which are debited and credited. So here also you can see, when the cash is coming, cash account is on the debit side. When cash is going out of the business, cash account is on the credit side. Or else you can remember like this also: when cash is coming in the business, write down on the debit side of the cash account. When cash is going out of the business, write down on the credit side. So in the first transaction, on the 1st January, Juma commenced business with capital in cash. Capital in cash. So we already saw that in this transaction, cash is coming in the business. So writing on the debit side, when the cash is coming in the business, so it is 1st January. So 1st January, you can write down 1st Jan like this also. 1st January, cash is coming in the business. For what purpose? For capital. So here you will write down capital and amount. Amount is, here you can see, it is 50,000. So in the amount column it will go 50,000. Okay. Folio is used to record the page reference number of the other book in which the other effect is given, other effect of the second account credited or debited. So here the account credited is capital. So we have written here on the debit side of the cash, capital. So in the capital account it will go on the credit side. So in the capital account you have to give effect on the credit side. On the 1st January, here while writing you will write down cash, that is name of the account which is debited. So in the cash you are writing on the debit side, and in the capital you will write on the credit side 50,000. So if you can see here, account debited is cash. So in the cash account we have written on debit side, we have written in the cash account. And while writing here, we are writing the name of the account which is credited. And which account is credited? Capital account is credited. So in the capital account you have to give effect on the credit side. capital account is credited. So in the capital account, write effect on the credit side. While writing here, you have to write down the name of the account which is debited. So which account is debited? Cash account. So here you are writing cash. So very simple rule. In the cash account, debit side you have to write down this account name. In the capital account, credit side you have to write down this account name. Never write down the same account name which is on the top. Like in the capital account, capital word will never come inside the account. In the cash account, never on the debit or credit side word cash will come. Okay? Except in the double column cash book for the contra entry. But when it is single column, never the word cash will come over here. Now the second transaction is January 2 bought goods for cash. Bought goods for cash means cash is going out of the business. Cash is going means you have to write down cash account credit side. What is the date given? 2nd January. Here you will write down for what purpose cash is going, for purchases. So write down purchases and amount is 40,000. See, if the page number is given, that what is the page number of purchases account, then it will appear here in the folio column. So here purchases, cash is going, so you are writing on the credit side word purchases. And now in the purchases account, effect will come on the debit side. See, in the cash account, credit side. So in the purchases account, on the debit side, purchases account debit side, date is 2nd January. While here you are writing, you will write down the word cash and amount is given of purchases 40,000. Okay? If I explain for like this, that which account is debited? Purchases account. So you are writing in the purchases debit side. When you are writing, you have to write the name of the account which is credited. So here cash will come. Okay? And in the cash account, it is on the credit side. So you are writing on the credit side of cash account, you are writing the name of the account which is debited, that is purchases. Now transaction is on 4th January. Sold goods on credit to Macho. Sold goods, here it is on credit. Okay, so there is no cash transaction. Cash is not coming in the business or even not going. So which are the two accounts affected? Macho and sale. Sold goods on credit. So who is receiver? Macho is receiver. So Macho's account is debited. So in the Macho account, effect will come on the debit side. Macho account, effect will come on the debit side. Transaction is on 4th January. So in the Macho's account, writing on the debit side 4th January. While writing, you have to write down the name of the account which is credit side. So sales account is credited. So here in the Macho's account, write down here the word sales. Okay? Sales. What is the amount? Amount is 15,000. Okay? And which account is credited? Sales account is credited. So in the sales account, you have to write down on the credit side. Credit side, date is 4th January. While writing, you have to write down the name of the account which is debited. So which account is debited? Macho's account. You have given the effect in the Macho's account debit side. So in the sales account, effect will come on the credit side. Okay? See, these are the principle of double entry system. One account is debited and the other account is credited. Okay? Now the entry on the 5th January. On the 5th January, it is sold goods to Chaka. For the sold goods to Chaka, who is the receiver of the goods? Chaka. So Chaka's account is debited. And sales account is nominal account. Sales account is credited. So in the Chaka's account, entry will come on the debit side. In the Chaka's account, entry will come on the debit side. So while writing in the Chaka's account on the debit side, you will write down the name of the account which is credited, that is sales account. So in the Chaka's account 5th January, write down sales and the amount is amount is given 20,000, so write down here 20,000. Second effect will be in the sales account. So sales account, write down on the credit side. See, checkers account is debited and sales account is credited. So in the sales account, write down on the credit side checker and amount is 20,000. Now next one, on January 12th, after 5th January, 12th January, sold goods for cash 25,000. So here sold goods for cash. So cash is coming in the business. When we are selling goods for cash, cash is coming in the business. So debit side in the cash account, debit side in the cash account, 12th January. See, entry is on 12th January. Okay, sold goods for cash. So write down here sales and the amount is 25,000. Okay, and one effect will be on the debit side, so other effect will be on the credit side. So in the sales account, write down on the credit side, sales account, write down on the credit side, 12th January, here you will write down cash. See, when there is a credit sale, the personal account affected, macho and checker, but when there is a cash sale, we have given effect in the cash account debit side. So here what we are writing, cash. So if we see like this, see, for the 12th January, cash account is debited, so we have given effect in the cash account debit side and sales account credit side. Now entry on 15th January. 15th January, bought goods from Byte. Bought goods from Byte. Again there is a no cash receipt or cash payment. It is credit transaction. Credit transaction, bought goods from Byte. So purchase account is debit side and who is giver? Byte. Byte account is on the credit side. So in the purchase account, write down on the debit side 15th January. While writing, you have to write down the name of the account which is credited. So Byte account is credited. So Byte and amount is 10,000. So write down here 10,000. So purchase we have given effect on the debit side. Now Byte we have to give effect on the credit side. So in the Byte account, write on the credit side Byte, write down effect on the credit side. Date is 15 January. While here writing, you have to write down the name of the account which is debited. So purchases and amount is 10,000. After that, on 16th January, paid wages in cash. Cash. So paid wages means cash is going out of the business. So in the cash account, write on the credit side. Why cash is going? For the wages. So write down here wages 9,000. So in the cash we are writing on the credit side. So in the wages, effect will come on the debit side. In wages, effect will come on the debit side. So write down in the wages debit side. What is the date? Date is 16 January. So write down 16 January. Cash. And how much is the cash for wages? 9,000. After wages, next on 25th January, paid transport charges. Again there is a payment, cash is going. So in the cash account, write down on the credit side 25th January, transport charges 1,000. See student, don't just watch the video, you also make this all necessary ledger account, and with me you also solve all this full sum. You also post all these entries. So in the cash account, credit side effect, so transport charges, give effect on debit side. This is 25th January. So 25th January cash. The amount for transport charges is 1,000. After that, last transaction is paid rent. Again amount is going, cash is going. So 29th January, rent amount is 5,000. So when we are giving effect in the cash account credit side, so rent account will have effect on debit side. See, one effect will be on debit, one effect will be on credit side. This is double entry system rule. So 29 January cash is going, so rent is 5,000. Rent is 5,000. See, so here payment for wages, transport and rent, these three accounts are debited. So we have written in this three account on the debit side. What we have written, the name of the account which is credited, that is cash. See, and in the cash account we have given effect on the credit side. Cash account is credited. So in the cash account on the credit side, the name of the account which is debited. So in this way we posted all the transactions to the ledger account. Now we will balance account. See student, this is very important to balance account. Many students get confused that how to balance account. See, so listen very carefully. See, in the account there is a debit side and credit side. So always make total, add a both side to find out their totals. So debit side you have to make total and credit side. Don't write here. Just make total and you can write down anywhere in the rough. So for cash account, see, total for the debit side is 50,000 plus 25,000, that is 75,000, and credit side total 40 plus 9 plus 1, that is 50,000, plus here 5,000, that is 55,000. Okay, so we made total for both the side. For the cash account, debit is 75,000, credit is 55,000. See student, listen very carefully. Now deduct the smaller total from the larger total to find the balance. Okay, deduct the smaller total from the larger total to find the balance. So smaller total is 55,000. When we deduct from 75,000, we get balance of 20,000. Okay, now enter the balance on this side with the smallest total. So this balance we have to write down on the smallest total side. On the smallest total, see which side is smallest? Credit side is smallest. So write down there, we have to write down last date, that is 31st January. The smallest total, I am writing this with other color pens so that you will understand that the difference, that which is the balance. So write down the balance on the side with the smallest total and call it as a balance C/D, that is balance carried down. What is the total balance? Balance is 20,000. So write down here 20,000. Okay, now enter total level with each other. Okay, so total now it is same, equal, because we have written already the balance. So both side total will be 75,000, because here the total is 55,000 credit side. So difference amount we have written 20,000. So this total, make sure it is on the same line and balance carried down is above the total. Okay, now this balance we have to enter on the line below the total on the opposite side. See this side, credit side. So opposite side here on the debit side, we have to write down this balance below the total and we have to call it as balance brought down. Okay, the short form is B/D, balance brought down. How much is the balance? 20,000, and we have to give date of the next accounting period, that is after 31st January it will be 1st February. Okay, 1st February. Okay, so in this way we found out the balance for the cash account. In the same way we will find out the balance for all other accounts. I am explaining as well the balances in the other accounts. See again how we are doing. We are now for the purchases account. See which side total is more? Debit side, right? 50,000. So from the 50,000 we have to deduct the smaller amount. So we got the balance 50,000. So that balance we have to write down on the smaller side. So here you will write down on the credit side 50,000. We will call it as a balance carried down, and the last date we will give. Then total we have to write down on the both side, so that is 50,000. Okay, and this balance we have to carry on the opposite side, and we have to write down on the line below the total and give the next date, that is 1st February. You can write down 1st Feb like this also, or 1-2 also, and the amount you will call it as a balance brought down. Amount is 50,000. Okay, now the next one, see here also there is no amount given on the debit side. So 20, 40, 50, 60. 60,000 is total. So that total you have to write down on the lower side above the total. Give it name balance, carried down, give date last 31st January. See, just remember that you have to make the total same. So which side you will write down to make the total same? The lowest side, of course. And then carry this balance to the next side, opposite side, and give name balance brought down. Okay. See student, the balance here for the cash account I am explaining. See, balance which comes here on the credit side, this balance is known as debit balance. Remember, this closing balance is known as debit balance because it is transferred to debit side. As debit side is more, balance is known as debit balance. Okay, for here, so purchases, again this balance is known as debit balance, closing balance. Okay, for the sales, this balance is known as credit balance, credit balance. Now in the same way we have to close all account, like for Macho, 15,000 on both the sides, and then balance carried down 15,000, last date here, next accounting period date 1st February, balance brought down 15,000. Now for Bytes account, see, if there is just one amount in the side, you can just draw two lines as well. Now here balance carried down I have written and balance brought down. Now in the same way we will close all this account. Wages account, see 9,000 is given here. On the debit side there is just one item. So when we were closing the account, on the lower side you have to write down balance carried down 9,000, then the opposite side below the total 9,000. So it is known as balance brought down. For the transport charges, then transport charges, closing account, balance carried down, brought down. Rent account, as there is just one item, you can draw like this line also, or you can write down the total as well, like 5,000 both the side. Then above the total, balance carried down, and opposite side you are writing balance brought down 1st February. Same for capital account and checkers account. Now here you can see wages, transport charges, rent. Their balance is known as debit balance. Expenses have always debit balance and income always have credit balance. Now capital, this balance is known as credit balance. Capital always having credit balance. And checkers account being is a debtor, balance is coming debit balance. Now as given in the question, we will also prepare a trial balance. It is asked to prepare a trial balance. See, trial balance is a statement showing a list of all debit balances and credit balances of all accounts extracted from the ledger. To check the arithmetical accuracy of the double entry recording of business transactions at any given date. Now here we have the transaction till January 31st. So student, I am again making other video also for trial balance. Now here in this question it is given to prepare trial balance, so just I will show how to prepare it. to get an idea. In the books of Juma, trial balance as at 31st January 2010. So name of account, debit amount, name of account, credit amount. It is very simple. It is very simple. You have to just check that the account balance is whether it is on debit side or credit side, and pick that amount and write down in the trial balance. So cash account, it is a which balance? See, it is given on the credit side. So as I told you, it is debit balance. Here when you carry forward to the next accounting period, we are writing on the debit side. So cash account or debit balance. So write down on the debit side of the trial balance cash, and the amount is 20,000. We are checking the balance amount, balance of all the account. Purchases account, debit balance 50,000, 50,000, and sales it is given 60,000 on the credit side. So for the purchases, write down on the debit side, purchases 50,000, and sales on the credit side. Sales on the credit side, see, you can check it. It is given 60,000, 60,000. Always remember, trial balance, purchases comes on the debit side, sales come on the credit side. I will explain this again when I am going to make the video for the trial balance. Now Machos account, the balance is on the debit side, 15,000. So write down in the trial balance debit side, Macho 15,000. Being a debtor, his balance is coming on the debit side, all assets having debit balance. So Macho is a debtor. We sold goods to him on the credit. So this amount is receivable from him, 15,000, as the goods are sold on the credit. So his balance is coming on the debit side, his debtor, his asset. So Macho's balance we are writing on the debit side. And the Byte, see, balance is which side? Credit side, right? So Byte, write down in the trial balance, credit side. Byte 10,000. In the same way, we have to write down all the effect. See, wages, transport and rent, all you can check the balances on the debit side. Okay, see, the balance is coming on the credit side, means it is a debit balance. When the closing balance is coming on the credit side, it is known as debit balance. Okay, so it will come on the debit side. So on the debit side, wages, transport charges and rent amount we have written on the debit side. Now capital balance is on the credit side, 50,000, and Chaka balance is on the debit side, 20,000. So write down respectively, capital write down on the credit side and Chaka write down on the debit side. Capital amount is 50,000. So write down 50,000 for capital, and Chaka it is 20,000. Now the last step for the trial balance is make total on the both side, and it should get same. See, objective of a trial balance is to check the arithmetical of the accuracy of the recorded transaction. Okay, it should be equal both the sides. So if you can see here, 20, 50, 15, 9, 1, 5 and 20. When we make total of this, the total is 120,000. Same here, 60, 10 and 50. So it is 120,000. So in this way, trial balance total is same. So students, go through this sum again, and also you also prepare all these accounts in your book. Okay, thank you students. We will see in detail again in the next video. Again we will come with one more sum. Okay, bye.